Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and let's break down today's market price action. It's a Wednesday, August the 7th. Hope everyone's doing well and keeping up with this volatility. So let's just get into what's happening with the broader markets today. We'll take a look at sector heat map analysis, and then we'll talk about possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we jump into the market analysis, let's just jump right into the numbers here. Well, today was another interesting day in the markets as the volatility continuing on. Now, if you take a look at the numbers, these numbers are still not the good numbers. I mean, if you take a look at where we were earlier, we did raise a lot of the gains, and then we are end up negative today. So Dow Jones down 1.73%, S&P down 0.67%, Qs are down 1%, and so is the small cap. So seems like everything is sort of down again. And if you look at overnight markets, we were actually a lot stronger. So there's a bit of that relative weakness that we are seeing here. Markets are just not able to hold on to the gains. So what we have is volatility that continue to rise again. Again, we saw a sharp pullback yesterday, but then today we see a pickup again. But overall, I think the highlight for these markets is that they are not able to hold on to the gains, something that we need to continue watching out for. Now, if you take a look at the chart here, take a look at how bearish of that candle we have today. So we did sort of bottom out. I mean, we had that big gap, and then on Monday, things sort of recovered. But here we are on a Wednesday, and now this is not the candlesticks you want to see. Now, if you take a look at it, we are below the 20, we are below the 50. And at this point, it looks like market wants to take another leg lower. It's not one of those V-shaped recoveries that, we are out of the woods yet. I think we definitely have a little bit more downside risk. Now, same thing we're seeing in the Qs as well. And of course, we can see the same thing in the small caps. So again, we had this huge, market rotation that was taking place. And now everything is sort of down in the dumps here. So again, definitely a risk-off sentiment than what we had recently. As you can see that in the numbers. I mean, take a look at the advanced decline ratio, only 33% up, and then we have the plus 50 to moving average. And it's crazy number, the shift that we have, I think around 28% just last week, and now we are at 68% to the downside below that 50-day moving average. So the market does look weak here. Now, this is the heat map analysis, and you can see there's a lot of red. Few grids in there, but overall, I think the market seems more bearish to me than it was just a week ago. Now, as far as the outlook goes, I think we're sitting at a -2 here. Again, this is the time where the market has shifted greatly, and I think as the markets are still look shaky here, I think we just have a little bit more downside risk before we even bottom out. So if you take a look at the setups here, you only have 2 longs, one neutral, and there's more short opportunities that I see here. Let's just go with the first one. That's T-Mobile. So if I look for, something that's doing well, this is the one that's holding up much better. So I like it more to the upside if you're looking for any long exposure. And same thing goes with the DoorDash. Take a look at, this thing has been down my list for the longest time. And then take a look at this big pop that we had here. Today's candle looks like it wants to pull back. What I'm really looking for is that maybe it's pull back down to these moving averages, or even a pullback to a certain level where, maybe this turns out to a nice reversal pattern, but pull back and buy into that. So that's another one that I have on my list here, but I think we have to be careful when we want to open the bullish trades as the market looks shaky. Now, on the sideways trade, I have the Alibaba here. You can see that this thing's just not going anywhere. So, on the upper end of the range, we got 80, and then on the bottom end of the range, we got about, 72 here. So that's a bit of a range that we're dealing with. Now let's talk about the relative weakness here. Here we have Micron, looks pretty weak. You can see small bounce down low again. We have Intel Corp. You can see that big gap lower, and after that, there's just no bounce whatsoever. Even when the market bounced, this thing stayed weak. So I like this further to the downside. We have Carnival Corporation, CCL. You can see similar to what the equity markets are doing today, just roll over. And so is a firm, looking very similar setups here. So as we browse through, and I can go through charts over charts that kind of look very similar. There's more shorting opportunities, it appears, than on the long side. So this is where you get to run a balanced approach, look at the outperformers, also look at the underperformers, and pair them accordingly. As far as the outlook again tomorrow, I think there's more. The way we closed today, there's definitely more risk to the downside. I know a lot of traders were thinking that we are out of the woods. I don't think we're out of the woods yet, based on what we are seeing in the price action. So watch out for another spike in volatility, or maybe another leg down in the markets before bottoming out. So there's still a little bit more of that shakeout supposed to happen, where there's forced liquidation takes place. As far as the economic reports, we only have an employment claims tomorrow, few earnings report. But I think this is where you got to continue paying close attention to the market sentiment, what the price actions telling us, and then also take a look at overnight activity as well, because there's definitely a lot of volatility that we're seeing, just not in the U.S., even Japan. Like there's a lot of movements that are taking place. If you want to avoid the volatility, maybe the best time to stay in cash and look for that opportunity to come up where there's a good long opportunity. But I think right now, that's market has definitely shifted. Way we were, just a week and a half ago. So trade carefully, manage the risk, and we'll see you in the next update. Cheers. Happy trading.